Welcome to Quantum Finance. My name is Parker. I'm the head trader here, and this is our market recap for Wednesday, June 21st. So, first we'll start with the stock market analysis, then we'll do our market recap, and then we'll look at some news and go over the economic calendar. So, starting here on the daily chart of the S&P 500 Spider ETF here, as you can see, red day today, continuing our pullback after that strong move to the upside we got last week, getting rejected up here off this upper extreme. If you look down here at the volume, as you can see, pretty low volume week this week so far, but this is to be expected when you do have holiday weeks. As you can see, the Tuesday and today well below that volume average. Looking over here at the weekly chart, as you can see, getting that wick to the upside that I was talking about last week on that big green candle we got. I did say that looks like a topping candle, as you can see, getting back inside the upper extreme here. I did say I was expecting a pullback to this previous high here from August, and that is kind of looking like what we're getting currently. As you can see on the RSI, pulling back here after getting up really close to that 70 overbought level. Now we can look at the 3-minute chart from today. As you can see, big gap down this morning, getting a sell-off off the open, getting a recovery here, going in for a double bottom, consolidating for a while before getting a nice push up for a retest of the open, pulling back after getting rejected at the open, finding support at yesterday's lows before getting a nice bounce off that level to break the open and make new highs on the day, and then getting a strong sell-off here into the close, closing right here below yesterday's lows. You can zoom out a little bit more here. Looking at the 15-minute chart here, as you can see that gap up, we did pull into, these kind of previous open and closes here from last Wednesday. As you see, pulling down into that level, finding support there with that lower extreme, consolidating for a while before getting that nice push up to this upper extreme here on the 15-minute chart. Getting close to filling that gap, but not quite there, before getting rejected at that level and pulling back down here into that lower extreme. Breaking down through our zero line here on the Klinger oscillator. Looking over here at the 2-hour chart, as you can see, we did get that trend reversal yesterday as we did break down through that downtrend, getting rejected up there after our retest, getting that gap down this morning. And you can see just kind of going sideways today, not too much extension to the downside, but we did get a pretty bearish close. Our signal line here starting to catch up here with our Klinger oscillator. As you can see, it was pretty overextended to the downside, which is kind of why we've chopped around today for the most part. Now we can do our market recap, starting in the debt market with the U.S. 10-year yield. As you can see, slight green day today, very large wick to the downside, pretty much, almost no price action today, just all wick. Closing right there, pretty much where it opened at that midline. Kind of looks like maybe an ascending triangle forming here on the 10-year yield. Looking at the dollar, as you can see, red day here in the dollar, getting a strong move to the downside, really pushing down into this lower extreme and a retest of these lows from Friday. Looking pretty bearish here on the weekly chart, looking like it wants to make its way down towards this lower extreme. Turning to cryptocurrencies here, as you can see, Bitcoin currently sitting right at 30,000, breaking down through this downtrend we mentioned last week. Yesterday with that big move to the upside, today another massive continuation day today, getting up into these previous resistance levels here from the end of April and really getting close to this previous high back here from Thursday, April 13th. As you can see, pulling down here, bouncing off that weekly midline and getting a nice squeeze up here towards this upper extreme. Looking at XRP here, as you can see, green day here in XRP, finally getting up through that midline. That's what we like to see for it to start flipping bullish here. It's kind of same story here on XRP. As you can see, getting rejected off the upper extreme, pulling down here into this weekly midline as a support, and we are starting to bounce off that level now. So yeah, I would like to see a nice green week, this week and next week in XRP. Turning to commodities, we have oil with a nice green day today after bouncing off that midline. Still just kind of consolidating in this range down here that it's been in for quite some time. Looking at gold, as you can see, red day here in gold, squeezing to the downside, breaking down through these lows set from last week and back here from the end of May, really pushing down through this lower extreme, but as you can see, getting a nice wick to the upside back above it. Looking pretty bearish here on the weekly chart, as you can see, getting rejected off this upper monthly extreme and rolling back down here. Looking at silver, as you can see, big red day here in silver as well. After that big red day we got yesterday, continuing its move to the downside, breaking down through these previous lows back here from the end of May. It really pushing down into this lower extreme. If you look here on the monthly chart, as you can see, rejected off that upper extreme and now pulling down into that midline. Now we can look at some news. So here we have the active listings of U.S. homes for sale. As you see, the number of homes for sale dropping to its lowest level on record in May. And this data does go back to 2012. Here we have through May, the number of multi-family home housing units under construction rose again and is now tied for the record set back in 1973. As you can see, multi-families and apartments skyrocketing with just normal real estate homes, single-family homes declining significantly. And we also had the Fed chair say today that crypto assets appear to have some staying power in the U.S. economy, which is kind of ironic because we do have the U.S. SEC trying to completely destroy cryptocurrency. And we also have the Fed chair reaffirming that more rate hikes are likely as inflation remains well above where it should be. And there is odds of a 25 basis point rate hike in July running up to 80%. And there's now a 15% chance of 2 more rate hikes by September. We also have $1.5 trillion asset manager Invesco reactivating its spot Bitcoin ETF filing. It did previously file back in 2021, but it pulled it once, pretty much everybody's ETFs were getting rejected, and it finally did activate it. That SPY that we look at, that Spider ETF for the S&P 500, this is who manages it, that Invesco company. We also have some breaking news here that group of America's largest investment firms, including Citadel, Charles Schwab, and Fidelity, are launching a Bitcoin exchange this week. So there's a lot of big moves happening this week. That's obviously why Bitcoin is just mooning right now, getting a nice trend reversal to the upside. You do have a lot of bullish news here with the major players from Wall Street launching an exchange, and you have the big boy hedge funds launching or filing for an ETF for cryptos. And here we have the retail only put call ratio. As you can see, it dropping significantly here as the price is breaking up here in the S&P 500, breaking above these highs from August. As you can see, the massive increase in calls here from the bullish retail traders as the market is moving higher. Now we can look at the economic calendar. So today was Wednesday, June 21st. We did have the Fed chair testify. We went over some of the things he said. And tomorrow, Thursday, June 22nd, we do get initial jobless claims, existing home sales. We do get the Fed chair continuing his testifying in front of Congress. And we also get crude oil inventories. But yeah, so that'll do it for the video. Appreciate y'all watching, and I will talk to y'all later.